Hello everybody, my name is Clayton and I wanted to make a second part to the first video that was posted a few days ago. As you can see, my value has increased, but that's simply due to deposits. The holiday season had just passed, so I figured the money that wasn't being used to help my family, I'd put into investments to see if we can grow the portfolio just a little bit quicker. Now, as I was stating in my last video, I'm not going to be somebody that's been putting in $1,000 a month or even what I've seen $1,000 a week. It's just not feasible for me, my family, or where we're at. What I do ideally want to do is put about $250 in, give or take, depending on our financial situation and what I get paid, and just things like that. Obviously, things come up and we need to be careful, but we do want to grow a portfolio. Now, the main thing I wanted to talk on today was the assets we have. As you can see, the same 6 that were there before are also still in my portfolio. They're not going anywhere anytime soon. And I added some bonds. But the main thing I wanted to focus on, because I had talked to people that watch the channel, and they were asking why I picked these, or I've seen people that look throughout YouTube and online as to why they pick specific stocks they want to invest in. And a perfect one I want to focus on 2 today. I want to focus on IBM and I want to focus on Disney. First, I want to start with Disney because though Disney, as you can open up, they're valued at $145, which is also why M1 Finance is my favorite site that I've come across thus far, and why I've really started to invest in them, because with the money I'm putting in, I can't afford to just buy 6 Disney stocks and just sit on them. I need to be diversified with the market because things are going to fluctuate. That's what happens. Let me go back to the portfolio and give you an example. When looking at it, you can see with my portfolio right now, almost everything I have is in the red. It has a loss. But with the dividends, that's not really that big of a deal. That's not my focus point. My focus point, though it is important to have a little bit of gain, I'm not really focused too much on the actual value of my stocks. Yes, IBM brought them up and now has me in the positive by $9. But again, that's not really my focus. I'm focusing on the dividends and make sure that companies have a consistent payout. And as I was saying, we're going to go back to Disney. There is a site that I use called Seeking Alpha and also Dividata. I'll show you all. Let's go with Seeking Alpha first. So on Seeking Alpha, you just type in the ticker symbol, and we'll go to Disney. And when you're there, you can get the summary, you can get everything on their information. But the main thing I care about is dividends, because that's what I'm investing in. That's what I care about. Now, they've only got a dividend of 1.23, which is quite low. And realistically, with that dividend rate, you can put your money in a lot of online savings accounts and make more than that. I know Ally currently, which we have some of our money in, is making about 1.6, 1.65 at the time of this video. So yeah, you can make more money doing that. But the thing with Disney is, if you look at their dividend history, they have been a consistent payer. Let's go to all. You can see that once they started paying dividends, they've been pretty consistent. In 2014, they did have a drop-off, as you can see here. They overestimated what they were going to make when it came to revenue. And it was, I think, if I remember, it was a 20% drop in their stock. But since then, they've been growing. And to me, as somebody with a young child, live here in Orlando, I see how much Disney has and what they're growing. And especially now with Disney Plus, I think there'll be one that you're going to want to hold for a long time. This isn't one I'm not looking to sell any of my stocks, honestly. So that's not something I really care about. But this is one that I've always wanted to have since I was younger. It's kind of one of those bucket list things, even though it's a very small percentage. When you look at how what I'm at, it's only 4% of my entire portfolio. And I'm going to probably lower that as time goes on, as I increase and grow my portfolio, because the yield isn't anything that interests me yet. Yes, obviously I still want to grow towards it because I do think there's a future, but there's other things that I have interest in. I just want a piece of Disney. Maybe that's the wrong thinking, but to me, I've always wanted to have a little bit of Disney, and just that's how I am with that. But also, one reason I also said Dividata was, once I find a stock and I do my research as it comes to specifically the history, that's one of my biggest things that I focus on. I use Dividata just kind of as to reassure my thinking and to see. And as you can see, they rate the yield that's currently sitting at very poor. Now, what I will say, and this is just me personally, I rarely, if at all, use these rating systems to sway or make an opinion. They're more something I check just to see if my stance stands. But as I was stating, their dividend history is very high. It's rated an excellent, and dividend yield is very poor. For me, I just feel like this is something, like I said, that has a future going forward. Now, One that I'm very interested in, and it's at 22% of my entire portfolio currently, and I'll lower it as I grow, is IBM. IBM, let me pull up IBM for you, and you will see what I'm talking about. They also have been very consistent when it comes to paying out their dividends. And year after year, they've also increased those dividends. So let me pull them up. You'll see. Let's go to dividend growth first. I didn't do this with Disney, but I should have shown you. This shows you the rate at how their dividends have grown. And since inception when they started paying out dividends back in 1990, there was a small dip in 1993. But ever since then, even through the recession, year after year, their dividends have increased. So that was one main reason why I really like them. But let's pull up their dividend history to show how much they pay out when they pay out. You can see steady increase every time it's paid. One thing I didn't talk about on Seeking Alpha that I really like is when you're on Seeking Alpha and you find the stock you want, you go to dividend scorecard, you'll see their yield, which for IBM is a 4.66, which to me is a very good yield. You can get a lot higher, but I'm comfortable around the 3.9, just under 5 ratio. I know some people say that's too low, but I'm not looking to make millions of dollars. I just want to gross a little bit of money for my family. But you can also see on here how often they pay. And IBM is quarterly, which I'm okay with. There's some you're going to find monthly. There's some you'll find semi-annually. Disney, if I'm not mistaken, is semi-annually. But the main reason IBM interests me, and I pulled the article here, was last year they purchased a company they acquired Red Hat for $34 billion. And what Red Hat is, as you can see right here, is the leading hybrid cloud provider and accelerates IBM's high-value business model, is sending their open source innovations to a broader range of clients. Now, why does this interest me? Why would an acquisition of Red Hat be of an interest to me, especially because before reading this article and hearing that, I knew nothing about Red Hat, and I still know a good amount after researching them, but it's nothing that is drastic. But to me, this is the one reason why I did it. Let me pull up their value. Let me go back to theirs, and you can see. Their market cap right now sits at $123.3 billion. With the purchase, they spent roughly 28% of their market cap purchasing Red Hat. To me, that means it's going to be an investment that they're going to use and incorporate with their business. And as you can see, like I've stated, I don't really care about the short-term gains. That's not something that really interests me all that much. Yes, there has been a very quick growth as of the last few months, or last month and a half. I thought it was a little bit more for IBM. But with their dividends, especially with this acquisition, I feel it's just another reason for them to be in my portfolio personally. So examples like that, IBM, Coca-Cola, Disney, which again I stated is more for the future for me, and just because I wanted to have a piece of them. I have some real estate and I got some bonds to be careful. But going forward, I really look forward to continuing this investment. I look forward to the journey of being with anybody that's here. If you have any questions, have any comments, have any advice, I've admitted openly last time, I'm a new investor. I'm not going to try to come in here and act like I know the show and I can tell you exactly what to do, when to do it. I am not a financial advisor. This is something that I am doing in my free time to help my family. And to me personally, in the last few weeks that I've been doing the research for this, it's actually quite enjoyable. I know there are plenty of people that do not like dividend stocks. I have heard about it, I've seen about it, I've read about it. But to me, I feel like this is the best for my family and I. It's another form of passive income. We currently don't have the availability to do more active income with just our schedules. So every dollar helps. And in the beginning, obviously, dividend growth is going to be very slow. I know that. I'm not ignorant to that fact. But as my portfolio grows and grows and grows, more and more money will come through dividends. And eventually we can maybe tap into that, use it, or continue to grow our portfolio until we're a little bit older and maybe need the money or just need to start taking money out to even pay small bills. It's something that I'm not looking to make $10,000 a month or $1,000 a month off of dividends. Would that be a dream? Of course. But I'm also realistic. And I don't have the funds currently to invest the type of money that would be needed for that to be the case. Now, that's where I stand today. Obviously, a little bit has changed since our last video. Like I said, I've now invested about $400 more than I had since I filmed the first video a few days ago. I don't see that continuing. Like I said, my goal is going to be about $250 a month. But for now, it's been a pleasure, and I look forward to seeing you guys in the next video.